Markets are soaring today following the announcement that China and US have agreed to step back on tariffs. What's next? That's what we'll cover in the next couple of minutes. Before we start, as always, I need to stress trading financial markets unfortunately is high risk and we may lose all of our invested money. Moreover, I have traded for many years and I will share my view on the markets, but this does not make it investment advice. Please do your own research. So we're having some really nice developments in the markets. I hope you've been able to capitalize on some of these news we've seen since we had the update last week. So what happened? As you can see here on the left, today the US and China agreed to a 90-day pause on their trade war. What does that actually mean? The tariffs, the import tax, because that's what it is, from things from China to the US has been lowered from 145% to 30%. The Dow, as a consequence, has risen by about 1,000 points and the Nasdaq 100 is up with about 4%. These are on the futures, of course, not on the cash markets. What does this mean then? It means that the Nasdaq 100 pushed above its 200 moving average, and we should probably position ourselves for even higher prices ahead as well in cryptocurrencies. But we'll discuss the technicals in a minute. What else has been boosting the indices recently? We had the ISM services on Monday last week. They came in, as you can see here, at 51.6, higher than the 50.2 anticipated and higher than the 50.8 prior. And what's really interesting here is that we had all these tariffs in place for a short period of time, but we haven't seen the economy grind to a halt. That is what a lot of economists thought. Even the stock markets themselves, if you remember, they were down with about 15% or so following Liberation Day. But what is happening, which is really interesting, is that they went really aggressive with the tariffs. And at one point, if these tariffs would remain at really elevated levels, we would have significant inflation and significant slower economic growth or even a recession in the US. However, as they have backed down, we haven't really seen too much damage to the US economy. And that is exactly what the Fed said. The Fed said that the US economy and labor market remain solid, and they're waiting for inflation to potentially pick up. So they haven't seen any major impacts. And again, on the data, what we have seen slower down on the PMIs, and also we have fears in the market about what's going to happen in the future. We haven't really seen that materialize. Now, the Port of LA was saying that they were expecting 30% less incoming traffic from China compared with the year before. But now, as we have this pause, that might be mitigated a bit. Another reason as well why we haven't seen like a major sell-off is because a lot of companies bought ahead of these tariffs. So they stocked up. And now, as we can see from the data from the ports, that things are not looking too good. The government is backing off. So what's happening here, we had the Liberation Day and prices dropped to the downside. The US government has been able to have deals and just in general being able to back off. It would be fair to assume that the Nasdaq 100 continues to push to the upside. Last week and the week before that, we said we could be bullish from around these levels. That made sense. We said actually we could be bearish from here for this to go down, and we also said we could be bullish from here. And then when we're trading around these levels, I said let's wait. We need to wait for that to breach to turn bullish, as well the 200 moving average. But we breached that on Sunday, and we just pushed higher today. And what's happening here is that how can we trade this from a technical point of view? So if one wants to be really close to the price action, in other words, tight stop losses and just scalp, then I think if we would have a correction to something like 20,591, so we close high but then have a correction, I think people are going to look to buy that as long as you trade about 20,298. While longer term traders, they don't necessarily focus on this little key point, they would be focusing on this. So they would say as long as you trade about here, maybe we can reach all-time high in the next couple of months. But we need to be a bit cautious still, because we had a trade deal as well for the UK last week. Now, some of the higher levels of tariffs have been removed. That's fair, that's good. However, there's still a 10% tariffs across the board on everything else. And that seems to be the new norm. Even here with China, 30% is still very high compared with before. And obviously, if this is allowed to be in play for too long time, it will slow down world trade. It will also deliver a bit of inflation in the US. But for now, investors are hoping more dismantling, and then maybe maybe before the 90 days are up, we have some sort of even lower tariffs, although it seems a bit difficult to see that right now. Because what we have also been saying is that if they can go from having very high tariffs to have a better deal than before, to make it easier for US companies to establish themselves in China and vice versa, and also the rest of the world, then that's good. Business is good, everybody knows that. But we don't want to end up in a situation where we're worse off than we were before, because if that happens, we again get a bit of inflation and lower economic growth in the system. Without complicating it too much, is bullish news, and I want to continue to be bullish. All right, this is Bitcoin. So Bitcoin was trading here last week, and previously we said bullish on the break here, and then last week we said if we go down, people are going to buy as well. You have this resistance point here, and it's very straightforward. If you break those resistance points, especially when you have some good news, as we did have, because we went from the Chinese and the US delegates not even speaking, and then suddenly they were going to speak over the weekend, okay? That is bullish, and that triggered a breakout, and that could have allowed people to capitalize, at least capitalize, and have a very good weekend on the push in crypto. Now, what is really interesting though is that despite we have these tariffs coming down, so heading into the weekend, Trump said, oh, we can place them at 80%. The market themselves thought they were going to be placed at 60%. So heading into the weekend, we got news that they're speaking, but we also heard that maybe tariffs are going to be at 80, which is not too great. But then they were at 30, and that on its own is good news. And we did see Bitcoin spike a little bit higher, but then the market refused to push to the upside. So what can happen next here, which is a bit tricky, I personally think it's going to be a very similar situation like here, where we just have a bit of sideways trading, and hopefully we'll have that for a week or two and then break. Because if we break here at 107, I think we're going to go to 120, and then we have this long-term stock-to-flow model that says 250 to around $500,000 per coin. Also, we have the deregulation package from the US and cryptocurrency reserve that is probably going to kick in the next 2 to 3 months. So we have quite a lot of positive things ahead of us. So if we break, I would love that a lot. Because right now what's happening is that we are trading sideways here and is a bit overbought. So we need a bit of sideways price action, moving averages catching up and stuff. Again, game plan would be either bullish on break here, alternatively goes down to 99.4K, and I think people are going to be quite happy to buy between these two levels, pushing to the upside. Now, a bit more complicated, Euro USD. Euro USD, so we're bullish about 2,500 on the basis that the Germans are looking to outspend the Americans are looking to reduce their government size, and the fact that tariffs on their own lowers the prospect of growth in the US, whereas in the European area we're having the opposite. But at the same time, we said we've been bullish here for many days. I think it's 26 days or so. And we said a break to 2,500 would terminate that uptrend and send things lower. And indeed, we did push to the downside here, because the way the market is looking at this is lower tariffs, lower probability of recession in the US, and lower inflation as well. So we have that sell-off. And I think this could have been traded, of course, and selling the break to 1250, targeting these levels. So this would have been a good little scalp. And if we look at this now, I think we can bounce maybe 111.77, stop losses here, and then a bit lower. Now, say for example that they would have a terrific deal that is really going to boost economic growth, and it's going to really leave the US at a much higher point than it was before Trump took power, then yeah, I would have said we're going to go all the way down here. But we're not at that stage right now. We are at that stage where tariffs are still going to be at 30%. There's going to be quite a lot of inefficiencies for maybe 2-3 years until US industrial sector could compensate for the losses that are happening on the back of tariffs. So I think it might go up a bit and then a bit down. But then you have the 200-day moving average. You have this very bullish structure. If you didn't know anything about the economic data, this is a very bullish structure. And really down here, we want to be buying. But for now, up and then probably down. In the case of gold, so we had a bullish view to be bullish from here. Actually, the market was here. We said, let's look to be bullish here for this to go up. A couple of weeks ago, we said, look to buy here for this to go up. But yeah, the last setup here was stopped out. No question about that. And what's happening here is that less problems in the world, less demand for gold, still have a risk for inflation. So I still think this can pick up at one point. But right now is risk on, buy stocks, why buy gold? That's what people are talking about right now, at least for now. And even the dollar is getting a bit of a boost, and this is causing this to go to the downside. So now you're stuck in a triangle, which a break to the upside takes you substantially lower, and a break here and this level here takes you down here. If we go down to 2,987, it wouldn't really change the big picture. You have a 200 moving average kicking in. We still have a lot of problems, probably with inflation and lower economic growth ahead of us. It's just that for now, we need a bit of a break, and that's exactly what we're seeing here. So what's the game plan? I wouldn't go out and buy it here immediately, although it looks like it wants to bounce and go to the upside, because there's a genuine risk that we just break lower here over the next couple of days. So I would be quite cautious and just ignore this for now. I think it's going to trade sideways for a while, and then we'll see if it wants to go up or down. How about Brent? So a couple of days ago, I've been very bearish from these levels all the way down here, and then we're bearish from here on the way down. So last week we had a gap, and I said, let's be bearish from here. That unfortunately failed. As you can see here, the market pushed to the upside because more trading between US and China does increase demand for oil. Simple as that. The market is now pushing into resistance. Now let's look at this level-headed. The UK deal and this China deal are good, better than before, but not necessarily super good that we're gonna go all the way up to 76. I don't think so. We have the 200-day moving average coming down here. You have super strong resistance at 67.67. So I say we can go a little bit lower and then push maybe a little bit higher. But I think ultimately we're gonna roll over here in 2 to 3 weeks, and then we're gonna go down again. And then we'll see, because it's not too difficult to see that we can draw a line here and then maybe a line here. So we're probably gonna coil into some sort of a range, and then we'll see what happens next. What can you look forward to this week? Well, tomorrow we have US Consumer Price Index. It's anticipated to be a 2.4% year-on-year change, but we have Trueflation, which is a private company delivering inflation forecasts, and they tend to be quite good in detecting trend changes, and they suggest we can go a bit lower. So their own estimate for inflation is at 1.5%. So I suspect that maybe for tomorrow, maybe we can have an inflation surprise. So what can happen is possibly maybe inflation being at 2.3, 2.2 instead of 2.4 annually. And that could lift gold, that can lift your USD, but I don't necessarily think it's going to change things dramatically unless the reading is very low. In the case of indices, obviously a lower inflation reading is good for indices as well, so they might get another little push on the back of those. Then we have retail sales. That's going to be interesting. People think that we're going to have zero growth, so in other words, people will consume as much this month as they did prior month. That's going to be interesting given the tariffs. Very weak numbers can potentially cause a bit of profit taking in indices, and very strong numbers might lift them a tiny bit, but you can see we're up with 4% or so. We need a bit of a correction. Jobless claims are out at 1:30 on Thursday as well. So it's very interesting because jobless claims had a slightly higher reading than expected 2 weeks ago, and last week's reading was also a bit on the upside, and it does indicate that jobless claims are, at least for now, in an uptrend, which is bad. Not a strong one, but we definitely want to keep an eye on that if we get like an outsized reading again, because it could potentially show that some people are losing jobs on the back of these tariffs. Powell speaks on Thursday as well, just 10 minutes after the data. Will be interesting to see what he has to say. On Friday, we have preliminary of University of Michigan consumer sentiment. This reading is anticipated to improve a tiny bit, but it's interesting. I don't know if you were aware, but this reading is lower than it was during COVID and is lower than it was during the 2008 recession. So this is why the market reacted the way they are, because at least from a consumer sentiment survey perspective, people have been really worried. Now, just because people are worried doesn't necessarily mean it's gonna result into something, although there tends to be an okay correlation on the back of that. So we want to see, has sentiment improved or is it just getting worse? And that's the week ahead, and this is our weekly market update. If you have any questions for us, let us know. Just leave them in the comments below. Thank you, and see you next week.